If you hear nothing else, hear this. Do not fear capital losses. Welcome back. This is where we talk about how to enrich your wealth. Over the years, I have really learned a lot of valuable lessons surrounding planning. And when I look at your wealth, when I look at my wealth, I've come to some very big realizations. Anything that we want for our family, for our community, for even our business, anything that we want, we can have and we can really solidify with a well-defined wealth plan. Now, I call that creating an impact. So we can create that impact and we can utilize the wealth plan as the tool and the means to do that. Well, there's many different aspects of a wealth plan, and the one primary place that I want to dive into now is tax planning. Well, in general, tax planning is something that we talk about either at tax time, when we're getting all of our forms together, or closer to year end, when we're trying to plan for all the last little details. But what about in between? What about times where we have, especially for losses, which we want to be talking about, capital losses, maybe times in the year where it's going to be necessary to sell or to give or to do many other planning techniques to harvest those losses and to use them more proactively for doing your taxes and bettering your wealth plan for the future. So that's what I want to dive into today is capital losses. And you do not need to fear capital losses. In fact, they can be an incredibly good planning opportunity that you have available to you. So let's dive in. Let's talk about capital losses and how you can best utilize them. Okay, so obviously before we even get started here, it kind of goes without saying, but I do want to mention it, that you do not have to do anything. You can keep that asset. You do not have to make any changes. And as the value comes back up, then that whole idea is that you're not going to have the capital loss anymore. You see, capital losses are basically where we have a purchase price and then the asset has come down in value over the course of time. Yes, they have come down in value. Something has happened to make that so, and it may be an investment into a stock or a bond or something else. Maybe real estate. There's many other types of capital assets that you can go into as well. I mean, we even have capital assets like wines, paintings. You can even have a very old antique car. All of these are capital assets, and basically if you hold them for a period of time, you're hoping they're going to appreciate, but they may have depreciated. So what do we do with that? Well, yes, we can keep them, so that goes without saying, but there's a couple other planning opportunities that you have. The first opportunity that you have for planning surrounding your taxes would be to, well, gift it. Maybe you have family members, maybe you have others that you're wanting to gift an asset to, and this may be the correct asset to give. So that is a planning opportunity that you have available to you, is to gift those assets away. And maybe it's a sentimental reason or some other types of reasons that we would like to do that. Well, that means that you removed out of your estate, removed out of your tax obligations, and now you transfer that cost basis to the new owner. And yes, there may be some adjustments with those bases depending on things, but at the heart of it, yes, you can move and transfer and gift those assets to others. The second opportunity you have is very similar, except instead of gifting it to others, maybe you want to gift it to a charity. And a lot of times things like this happen with real estate that would be working out, whether it's a house, whether it is basically an investment type of apartment complex or an industrialized area that may have some warehousing that you would like to give, there's some very good reasons why you may want to be giving to charity some assets as well. Especially if we're coming down to end of year and we need to be gifting for other tax reasons, there's some very good investments to be looking at, and don't overlook ones that have capital losses. Now, I'm not saying that's the best use of the capital loss, but I am saying that there is some planning opportunities that can happen surrounding investments that have capital losses and how we can be gifting them, whether to others or to charities. The last one that I want to talk about is the most important. This is where you're going to get the most bang for your buck. Sell. Sell. That's it. Sell the assets. If it's something very easy to sell, like a stock or a bond, or an investment that you'd hold in your account, well, that can actually be very advantageous because you can take that loss. You can do a number of things from there. So now we've captured the loss. So let's say we have $1,000 of a loss that we have captured. Well, after a 30-day window from the time we sold till the time we are able to repurchase it, so on day 31 we could repurchase that asset and have it go back up in value if we think that's what's going to happen. We've captured that loss and we have avoided the wash sale rules. So there's a couple different aspects here that are going to need to be planning opportunities if you decide to go down this. That's if we keep invested into the same stock or very, very similar in kind of makeup. Well, what if we want to make some wholehearted changes? What if we want to go from selling an investment like a stock and moving that money into something else? Well, that's a lot easier because we can capitalize on the loss and set ourselves up for growth by going back into another area. Now here's where the planning really gets good. Let's say we have growth happen after that. Well, we can sell that growth at some other time, and the loss that we harvested will be offset by the gain, so we may not even owe tax on those gains because we had that loss. That's the power of harvesting losses. So at any point in time, a good wealth plan would look at losses and figure out the best opportunities and ways to harvest those losses as well. Planning opportunity with losses, selling them is a big piece of it. Now, let's say that's something else entirely, like maybe an investment property that we're not able to sell in similar manners, that we can't sell today and buy again tomorrow. Well, that is where now we have a lot of other thought processes that come into it. So yes, we can still sell it. Yes, we can still capture those losses. Investment properties are different than your primary residence, so there's going to be some distinctions between what you would be able to classify as a loss. But the harvesting losses can be one of the most powerful aspects to offsetting gains in the future. Now, the other aspect, let's say you don't have gains yet. We have the losses, we've captured the losses, but we have not captured those gains yet. Best thing that we can do from there is to use a portion of that money. We can do up to $3,000 on a yearly basis against your taxes. So we can have basically a deduction of $3,000 from your taxes. That is powerful. So when we talk about capital losses, yes, it can be disappointing that the value of your investment is less than what you paid for it. But don't forget the planning opportunities. And bringing this back full circle, the planning opportunities that you have today, the more we take advantage of them, the more we have that well-defined wealth plan, the more we can create an impact on your overall wealth to help you create an impact for you, your family, your community, and ultimately your business or company. That is the power of a wealth plan, and that is the power of tax loss harvesting as part of that. With that, feel free to reach out as you have questions, and we can go through your wealth plan and make sure you are set up in a manner that's going to be most suited for you and your family. Take care.